HoaQ AMA session. For these sessions, we just try to always like bring in an SME or someone who's in the space, whether from a founder's perspective or from an investor's perspective, to just come share on a particular topic, and also give a chance for folks to ask questions. So we've had in the past sessions on. Oh, please, if you can mute yourself if you're not speaking, so that we don't get any echoes or feedback. We've had sessions on, again, looking at a winning pitch deck. So what, as an investor, as an angel, what should you be looking at in the pitch deck? How can you read between the lines? And we had um, Ife from Berrywood Capital really helped with that deep dive. We actually have a summary of that on a blog post on our Medium, so do check it out if you've not seen it. We also had Peter from We Capital come talk to us about valuations. We all know those are going bananas, but also I guess we're also seeing a market correction these days as well. So just again how to look at valuations, different business models, and how those things at this stage and how things change over time for as a startup becomes more mature. But today we're looking at something quite different. I know that's a slide that many people just quickly skip by when looking at a pitch deck. We're like because we just write just take it with a pinch of salt, with with a grain of because like you guys you just never can tell. But again, like, is there a method to the madness? Is there a science to this? Can you actually um, at least validate or find ways to actually think about market sizing? I know time is a term that everybody throws around a lot. What's your time? What's your time? What's your time? In fact, last night I was at a pitch competition when someone was like, "Why am I asking a retailer for a time?" like, but I think it's just again important to that we just have a discussion around this topic on market sizing, so that you know what you're dealing with, and if there are ways to actually like look at was even like widening that time, or even like looking at other markets that again a founder could serve. At least you know what you're looking at, and for that conversation, I've just brought a friend of the group, Steven. Steven runs DFS Labs, and we've been lucky to co-invest with them in a couple of deals and build a relationship over time since we started HoaQ. So Steven, thank you so much for taking the time to join us on this for this conversation.
Yeah, man, thank you. I mean, going after Ife and Peter is no easy task. I wish you told me that. I wish I went first. But it's
Well,
awesome to be here.
yeah, I know you're being modest because I'm very sure if folks, if you go check out Steven's Twitter, I think you would really see he's one of the most analytical, like, or really very great thinkers when it comes to just again business model and the African like again market. So do check him out on Twitter. Do check out his writings as well. I know those things don't long form writing or you get to call it comprehensive writing. This is a lot of investments, and so thank you for that labor of love. For everyone helping for everyone putting those kind of things out, those kind of content out in the world. So thank you for that. Just to give you a run of like how the program is going to run today. We would have just again a welcome address. We would again jump into a Q&A where I will ask Stephen a few questions to get the ball rolling. Please, at any time, feel free to use the raise hand feature if you have questions, or you can use the chat as well. If you use the raise hand, it means that we are calling it. It's gonna be a live question that will call upon you to ask. And if you use the chat, we'll definitely get to those as well. So we'll just get the ball rolling. Again, thanks for coming. Again, for those who perhaps is your first um wow, just joined, and I think that might be problematic. So let's be watchful for bombers. Please, you can use your real name. That would be really helpful for this call. Um, but yeah, I think just for those who are joining for the first time, or joining any of our events and all, like this is HoaQ. HoaQ is HoaQ. Yeah, I knew that was going to be a problem. I can see MMM is already. So for like if you could just like either put them off. Or yeah, so like yeah, just remove them as well if that's because that's not a real person. Yeah, let's admit only those who perhaps the names are look more realistic. Thank you. Okay. Like I was saying, HoaQ is a community of operators um, operators operators and creators who are looking to again back early stage founders on their journey with both capital but also again other resources, whether it's skills, network, talents, and other needs that even founders have. We've been around for about 2 years now, and I've been lucky to build a community of some of you on the call. Deploying about a little over $2 million into about 67 or 70 deals, and we just again want to continue doing that, and again, of course, enabling ourselves as we do that because we really again there's always something to learn as investors. Our journeys are we're on different paths and we enter this at different levels. So again, like again, we host this kind of sessions to help with that enablement and help us again develop our skills or our processes when it comes to again reviewing deals and participating in deals. So yeah, with that, if you have any questions for us, please do not hesitate to reach out at hello@hoaq.club. And we have a couple of our members on the call today. Joe Kimby is here, Timmy is here as well, and the whole handle is managed by HoaQ as well. So feel free to reach out to any of us as well in the chats as well. So we'll just jump into the conversation. Stephen, I think just for those who might not know you, perhaps just again a brief introduction, like about you, about what you do at DFS Labs, and a little bit about your journey into just investing, like backing
Yeah.
companies. Like how did I all get started? How did you start on that journey?
Sure, sure. I'll go over the DFS Lab first, and then give you a sense of why I'm in this call, how I ended up here. So DFS Lab, we're an early stage investor. We generally do pre-seed through to seed, and we're very thesis driven. So a little bit like what Nubi hinted at is we're very much high on research. We're very high on numbers. We're very high on first kind of primary data that can inform where markets are growing, where markets are not big enough, et cetera, and we're Africa focused only. Our thesis is also, it also revolves around what we call digital commerce, and I think that term has meant more to different people than ever before, but it generally means we invest in commerce enablement, we invest in fintech that's mostly embedded, and we invest in things like logistics, and then very specific verticals where we think there is enough of a TAM, going back to today's topic, that there are venture backable returns. So these are things like food, transportation. We're starting to look into things like housing, but where people basically spend their money today in the large African countries that we invest in. We kind of accompany DFS Lab with an angel syndicate as well. I think if you join HoaQ, you should also look at the one that we run called Sufficient Capital. It's very much aligned with this thesis. So I think it's maybe a bit more narrow than what Nubi and Joe and them have been looking at. But if you're interested in what we're talking about today, I think that there could be something there. As for myself, I used to help run the fintech portfolio at the Bill and Melinda Gates Foundation in Seattle. And that's where my introduction to a lot of the opportunities in emerging markets, including those in sub-Saharan Africa, came from. And so the partner that I run DFS Lab with, whose name is Jake Kendall, was also at that team. And we spun out DFS Lab really to focus one on Africa. And then we actually started as a fintech fund that then evolved into this digital commerce fund because some of the topic areas that we'll talk about today. And right now the portfolio is around 25 companies that stretches from food tech through to fintech. And we continue to want to invest at that kind of pace. So that's us in a nutshell. I don't know if there's anything specific you want me to cover otherwise, but yeah.
No. That's again, it's what I folks just know, like yeah, who you are and what you do, and I like again, like I said, when I read through your tweets or your long form content, I think it's it's just again that, like I said, that your thesis, you keep the sectors you play in, and the thesis as well. I think it's quite clear and refined over time. So it's glad to see that actually a syndicate that actually helps for folks to participate as well in for those who subscribe to that thesis. So yeah, please guys do check that out as well. Um, so we've come to talk about like market sizing. That's our the theme for this conversation today. And I just wanted to start with just again perhaps common errors that you see founders and perhaps investors fall into when actually like again defining a sizable market.
Mhm.
Yeah, just one or two of those common errors that you've seen from the founder's point of view when they pitch to you, and also perhaps when your peers as well when they're talking about
Mm.
perhaps Africa as a market or Nigeria as a market or Lagos as a market. Like, what are those common errors that you've seen over time?
Yeah, it's a great question to start with. So on the investor side, or on the folks that are just starting to get into what it means to try to build a venture backable company in Africa, I think one of the most common things is that people start to peg their thinking on the overall population sizes. And then you see this kind of like learning process, right? So a lot of people start with like the entire population of Africa as the market when they start to think about African VC, quote unquote. And then they quickly realize that there are things like borders and politicians and regulators that do not allow that amount of population to really represent an addressable market of any kind. And then people start to get into like, oh, but there's X number of people in Nigeria, and there's X number of people in Kenya or Ethiopia. And then you quickly realize, well, there's only a certain percentage of those that have enough income or access to digital channels for you to actually advertise to. And I'm sure we'll touch more on how that breaks down in the future. But I think that's one of the core mistakes that people make, which is they overestimate TAM early on, and they get really seduced by large numbers when those large numbers don't actually represent true access for folks or to folks. But it also shouldn't dissuade people from investing in the sense that the amount of people that do have access and the amount of people that do care about and want to pay for these products is growing year on year at a pretty incredible pace. But starting with that number to me makes no sense. So I think that's on like the investor side. And then on the founder side, a very clear mistake we see being made is people underestimate what happens when they start a product, which usually starts with you advertising it to your friends or friends of friends or your colleagues, people that already trust you, know you, probably have heard your personal pitch and explanation about the product you're selling, making it much more easier for you to onboard and convert them. And then at some point they run out of like the friends and family segment and they start to hit a trough in terms of how quickly people sign up. And maybe they get lucky and they cross that trough or that chasm by getting into like-minded individuals that maybe you don't know personally. But eventually you hit another deep kind of gap between these types of segments. And I think what corrects for that is a lot of thinking ahead of time of what it actually means when we talk about the TAM and the serviceable markets and what it means for you to open up those distribution channels to reach those people, right? And so I guess in a nutshell, that mistake for the founders is mistaking early traction and speed as something that will be perpetual, because it's never perpetual. It's always stepwise.
Yeah, it's crazy because I actually read, I don't know who said that, where it said markets are not found, they're created. And it's a thing of like, you just believe that, oh, there is this market waiting for my product.
Right.
Like if I build it, they will come or they will just show up and use. But like you said, like there's that, just because like again, there's that initial like, oh, we want this, it's not going to translate to like there's a market for this. And just for those on the call who are just wondering, like you dropping things like time and serviceable market, like can you just like just talk to like just say, I mean maybe just the top few terminologies or glossary of like when I think about like market sizing that you should actually perhaps like have at the back of your mind.
Yeah. And so the most common one is TAM, the total addressable market. And this is generally like the total possible market for your product. I think most African founders usually contain that within 3 or 4 countries, 3 or 4 of the large countries. Some of them are very ambitious. And then you get a TAM that represents all of Africa. Some of them are just kind of crazy and they do like a global TAM, which like you can't really take seriously, frankly. But so that's your kind of the total population that you can actually address. And then Everything below that is a subset of that larger TAM, right? So you kind of are going like, if you imagine an onion, you're just like going into the onion with each new term. So the next layer is the serviceable obtainable market, the SOM, which is basically when you start taking out segments of the TAM that just don't apply. Maybe they're too old. Maybe they aren't working in the sector that you're trying to service them. Maybe they just were never going to touch your product, right? So that will be a smaller number than what you're talking about with the TAM. And then there's the serviceable. The next one is not the obtainable. The next one is the SAM, which is the serviceable available market, which is what I just talked about. And then the final one is the serviceable obtainable market, which I don't actually see a lot of people isolating that because it's such an obscure term. But in the past, like if you were to go back 5 years ago, like dating myself, but like you would see that more often. And it's basically who that startup thinks they're really going to start to obtain in the very beginning, right? So these are like a very niche segment that they'll start with, that they then eventually spread out to the SAM, that they eventually spread out to the TAM with more products, etc. So those are the three big ones. There's probably new terms I don't know about that you probably don't need to discuss, frankly.
Yeah.
Maybe I'll add a note that the TAM is probably the more important term. Like the other ones, they change very often, but your TAM, even though it evolves year to year, it's probably the one where, in my mind as a VC, I think, okay, that's kind of like the population where if things go very well, this is who you can actually attempt to sell things to.
So let's double click on that then, Sam, because that's what even most slides or decks will carry
Yeah.
today. And yes, we also probably will put the inner circles of like the SAM, and yeah, I think I've seen one some like in like 100 decks that I've seen recently. Like for that TAM, how would you have like how are they frameworks, like how would a founder or an investor reviewing a founder's deck really like on, like again, are there frameworks to again define what the TAM is, like again, like I said, addressable market, like what is addressable, like how do you define what addressable are there any part like features, characteristics, or just again elements to say, okay, this warrants me calling this my TAM? Is there any standard definition or acceptable definition of TAM?
I don't think there's actually a standard, but the kind of framework that I go with in my mind is like, what is the core problem and pain point that you're solving? So maybe you're building a housing startup, right? And your core pain point is that houses take too long or too expensive and too complex to actually obtain. I don't know why I picked housing. Is actually an area I don't know much about, but it seems like it's relatable. So to me, the TAM is that the population, usually within the country, I would think when you start, that needs housing, right? And so when you think of TAM, you can basically project a bit in the sense that maybe today, when you're building the startup, you only have like one or two features or products associated with that offering. When you think about your TAM, because you're so focused on like the core pain point that you're solving, which is the inaccessibility of housing, you can kind of project what other products or features are on your roadmap. And if they were true, you could access those other people, right? So the TAM is almost like your perfect world. If everything was built out well, you had capital, you had the right team, and then you built this suite of products and services, who then can you access, including, having access to the distribution channels to reach them? Who would that be? And I think the biggest shifts that I see between different projections of TAM are what we talked about, which is, are you then containing it just in, let's say, Nigeria? Or are you containing it within like a larger region? It's Nigeria, South Africa, et cetera, right? Or is it like Francophone? I think those are the biggest differences. But this idea of like projecting the perfect world is an important part of TAM because it shows me the vision of what you're seeing 5-10 years down the line.
Right. So there is an element of product evolution or products kind of like your product evolution and your TAM, because again, it's not just like the one thing I'm going into the market with, but again, like I said, like let's imagine like all things worked, or all things being equal, all things worked out as we planned, and this is the end game. This is a number of people that would actually like will be able to like again address what we've built, and also that's quite interesting because I would have actually thought your MVP determines your TAM, but you're saying that it's your MVP, but again plus the evolution on the back of that. that paints picture of the time. And then there's also a geographical like aspect to it. That's okay. If it's serving just Nigeria, this is our time. If we expand into X number of countries, the time also grows with that. And that's quite interesting. Just a segue from that, or a little bit. I mean, still on that point, but I was thinking about from a, let's say, vertical. I don't know, like vertical B2B startup, for example. So, we're serving laundry businesses and stuff. But
Mhm.
then, so our time is X, but then we could also serve salons. Uh, our like how would you like
Makes
how
sense.
would you guide it like again looking at terms from that lens of like, yes, this is a product for a sector, but we could start taking that product into other sectors as well, like
Yeah, yeah.
like
It's
a
an
more
excellent question. I think that's a really core question because, talking about TAM from this idea of like projecting a perfect model makes it almost limitless in some ways, right? If the founder is very thoughtful, maybe they do go from laundromat to salon to every single, services business in Africa, right?
hmm hmm
I think the one of the core things to kind of contain it with is what a startup is, which is to me, it's kind of a snowballing of resources that take advantage of economies of scale. So as you scale, adding more customers or more aspects to your more members to your marketplace, whatever that unit is, should help the next one come on, right? And so once that starts to break down, then I think you're not talking about the same TAM anymore. So in your laundromat example, if you're building the business in a way that is producing a lot of infrastructure that is specific to laundromats, you know, understanding how pricing works in that market, connecting customers that are specifically looking for laundromat services. Maybe you have something about like sourcing laundry machines, things like that, right? Then I think, as you build, you are building a laundromat based economy of scale business.
right.
Adding a salon to that set of infrastructure, those set of resources,
Mm,
doesn't necessarily make it easier each time you add another salon, right?
true.
Maybe someday you break through that.
Mm,
Now, it could be different if the pitch were much more generalized, right? We care about all professional businesses, and we're building a directory that anyone can access, and then we survey our customers for what they need outside of laundromats. Then maybe
mm,
you can argue for a larger TAM.
got it.
But the thing to think about there is that the bigger your vision becomes, the harder it is to de-risk over time,
Mm,
right?
mm,
So your vertical on the laundromats, I can see how you would get there. Once you start adding more and more businesses, it becomes harder for me to believe that
yeah.
that TAM is real.
Makes sense. Makes sense. All right. So like I mentioned, like so like yeah, so we've thought about like the framework around like how you think about TAM, and now how for then validation of that time. So let's say someone comes across to me and say, "Oh, Nubi, I'm building this startup. My time is X." Usually it's always like I mean, on the deck they never give like the reason behind the number. It's just like this is
Yep.
our time. Um, like as an investor, like how do I go about validating said time?
Yeah.
What question should I be asking? What could I be referencing? Or like how do you, Steven and DFS Lab actually validate stamp claims that founders actually like
Yeah.
you?
Yeah. I mean, and I can also just like rope in this question that I see Toby has. So TAM is generally it's formed in terms of like a population times a certain like order volume or like a certain ARPU. And so it does come out as a revenue number or a sales amount number. So it's usually a dollar amount or an IRA amount, whatever it might be, right? But in order to validate it, so one is I generally don't take that initial TAM number too seriously. Like I'm not going to hold it against the founder if they're off by, because one is like it's always changing, and two is it's really hard. Like we do this for a living, trying to estimate these things, and it's really hard. Like I understand how hard it is. So there's a couple things you can do to try to at least narrow the bands, right? So one is you can look at models that are similar but are more advanced operationally than this startup. So it might be very early stage startup. You look at something at like Series A or B, even if it's in another geography, and then you take a look at that and you get a sense of what usually is like the unit economics of that model when it starts to scale a bit more. So what is the average revenue per user for a more scaled model? And then you can start to apply, a range of ARPUs to a population size, right? And one huge caveat is, if I look at something, let's say in like India or Indonesia, you can't just take that ARPU and just like directly apply it to Nigeria or Kenya, but it can give you a range of like what's possible. And so that's one way to kind of try to validate that is like, are there enough people at this type of ARPU to really justify this amount? Two is like I look a lot at kind of
Just to
yeah.
clarify for those on the call, like output, what does that mean?
Yeah, sure, sure.
Yeah.
It's so ARPU or AOV, which is the average order value. ARPU is the average revenue per user. They're both just ways to get to a sense of every sale, how much money is that company making per sale. And sometimes you're selling one thing, sometimes you're selling a basket of things. So that's why there's like different, terms for this. But ultimately, it's how much are you making per order or per unit of sale. Um, to get back to what I was saying before, so that's one way to try to at least put some realism to it. The other thing that we look a lot at are underlying growth rates, right? Because the TAMs are a snapshot of usually today that the founders give you. Sometimes they project it out to, let's say, like 2025. What's important is that there is this idea that if the market itself isn't already huge today, that it's growing very quickly. So one area that we've invested in is cloud kitchens, right? It's relatively small in any market in Africa, but it's growing very fast. And so even though the TAM today for internet food brands isn't huge, we see the growth happening, and that gets exciting. And so a TAM there that is larger than what it is today makes a lot of sense. But those are two things I would always do: is look at growth rates, compare it, and then compare the actual kind of unit economics of it across markets.
Yeah, that makes sense. That makes sense. So let's talk about like the whole like top down, bottom up, because again, these are two ways in which people are actually going about sizing markets. You hear things like, oh, it's this bigger market. Yeah, sorry, my kids just came in to say
No,
hi.
all good. All good.
It's the people say, oh, it's this bigger market, and then if we can actually just capture 1% of US, or the market is this, and then I will target this age group, and then within this age group, does have a smartphone. So just keep drilling in, and then they're okay, this is my market.
Mhm.
And then the others are who will say, oh, okay, I'm looking for Shade, 16-year-old, spends this much on data. And so when I get her, I just need to find all the Shades that exist in the world, and that's my market. So like, just any thoughts on again those those different methods of drilling down or following up market
Yeah.
present.
Yeah, I like those two examples because they are the one you clearly looked at a lot of these persona like examples. I would say the top down one gives you a bigger picture of because there's like a difference between the economic opportunity of what that startup is going after versus the approach that that startup is taking to get to that opportunity, right? With the TAM, I'm less so looking at the approach, and I'm more looking at the sizing of the economic opportunity, almost agnostic of what that startup is. And so I like the top down a bit more in that way. So what you were talking about, like people cutting into just a general population amount so that they can get to what seems like, at least with today's distribution channels, they can get to, right? The one thing that I am almost always challenging founders on today is how much money do you think your users actually make a month, right? Not as they make and they can pay you, but like their total wallet per month. And so I ask that a lot because even though that is a cut that you don't see very often, I think it's one that is very important for a company that is trying to get traction today. So I would say top down is more important for that. For these persona stuff, it's nice in a way that it makes it more personal, the problem, but I don't put a lot of weight to it because it's like a point piece of evidence for me, right? And the startups that we invest in are so early that customer often changes by the time they get to Series Seed. It might even change from a consumer to a business by the time they get to seed, right? So I put a little less value on those types of like persona things. Although I gotta say I don't hate them because I do feel like it adds another dimension of like personal element to it, which I like.
Yeah, I mean, one could say that. I mean, that's more valuable from a product development point of view, where you're like, okay,
Sure.
I'm building for this person versus my market is all like this person multiplied by Because yeah, I still people spend a lot of like resources on again the old demographic, or so where is Shade consuming our content from, so I can spend my marketing dollars there. Where else we go to, so I
Right.
can like, so it's a yeah, it's I mean yeah, you could tell I worked in advertising for a while.
Right.
But yeah, that's quite interesting. So again, the bottom again a top down approach, like you mentioned, seems like the way to go. Do you buy the whole argument of things, or do you buy the when people actually make claims of like, or not even claims actually, but the whole thing about like if we just capture 1% of, and
Mhm.
then this is how big our business is. I mean, I've heard two school of thoughts. I feel like yeah, that's a good way to just show how big an opportunity is and things. But I've also heard the school of thoughts like, yeah, that doesn't really mean anything. Like capturing 1% of and no one ever captures 1% of anything. So I'm exactly curious
No,
to hear
so
your thoughts on
I'll
that.
only put weight into that is if it's a breakdown of like potential competitive shares of a market. So if it's like we understand that there's like six other players, we think that long term there might be like four winners, and that
Mm,
each of them maybe like equally share the market, or like two of them are monoliths and then like a smaller secondary player. Like that type of breakdown I like because it shows that the founder is thinking about what competitive dynamics look like. When it's someone that's like 5% of like some gigantic number, it like literally means nothing to me because we could just like increase the denominator as much as we want, right? It could be like all of Earth, and like you have to take like 0.0001. Like it just doesn't matter at this point. It's just too early for that. Maybe when you get to a growth stage company and you're like really moving volumes, maybe as a percentage of a region or a country might come into play because like you can actually hit those numbers.
mm,
But that early on, like frankly, it doesn't really
yeah,
move the needle for me.
that makes sense. You said something earlier which I wanted to just double click on. You said you've started asking, or you ask founders how much does your customer earn? Like how would you how would you even know that? Like what like is it, what, how does one find that out? Like how much,
You mean as a founder?
yeah, as a founder, like how do you figure that out? Like get that
Yeah,
data.
so I mean, sometimes the answer is as simple as like they get to target a certain income band, right? So they actually get to define who their target customer earns because that's who they're going to target. And the reason that I ask is not to like trick anybody, but it's to get a real sense of like because I'll post we have an article that Jake, my partner, actually wrote about the distribution of incomes in Africa. It's a little bit older now, but it's today it's not going to be that much different. It was written in like the end of 2020. It's called Fortune at the Middle of the Pyramid. And so we look at from a pretty macro perspective, like where most of the economic value is being generated. And you'll note like very quickly that like most of the value is between $5 to $15 a day in consumption. And so if someone is telling me that their customer has to earn $50 a day, or at least spend $50 a day, like I know that's just a sliver of something, right? It's just never gonna work. Like they're gonna have to push all their costs down to target a lower price point. And so unless it's a B2B business, which is different, like this is a B2C conversation. So that's why I asked that question. And frankly, if they haven't talked to enough people, potential customers, about that type of metric, I don't think they've done enough customer research.
Right. So you do think they should actually like, so it's, I guess marketing is more like should they actually just ask outrightly like how much do you earn, or or do
Well,
they
yeah,
actually
so if it's sometimes it can be a sensitive question, right? Like to ask your customers, like, hey, like down to the naira, like how much do you make? But like you can ask people, like, do you
in a
make
range
within
of,
this band, right? Like,
right,
how
right.
much do you spend on X category a month? Like things like
Mm,
that eventually get you to a bigger picture.
closer to okay.
Yeah, but knowing that picture is important.
Fair enough, fair enough. We have a question from Damola. It says, how do you prioritize between dominating a market and expanding to other markets? I
Yep.
guess that's the whole exploitation versus expansion exploration question. At what point should an early stage startup in Nigeria focus on other African markets? And
Mhm.
I'll just add some additional commentary before we go to the second part there. Because you do see decks of like, I mean, brand new startups saying, oh, we're going to launch in Nigeria, Kenya, South Africa in the next 6 months, and you're like, like you're not even live yet, and you're already putting like three countries on the map. I know there's a case of like when we are in a world where it's software, you can serve the market, the world from one location, blah blah blah. But yeah, I guess I'd like to hear again your thoughts on again how do you like how does a company shift gears between serving a single market to expanding to other markets? Yeah.
Yeah, there's different cuts of this that we could approach this, right? So one is there are some markets where you have to expand. Like if you start, I don't know, let's say in like Uganda or Tanzania, you almost have to expand to
Or
the
doubling
other
that means.
neighboring country, yeah. And you don't have a choice. Like that has to be part of your plan. And then you have to show me how you're going to mitigate against some of the issues and difficulties around that, which is like the next point, which is to talk about. You can talk to me all you want about expanding markets. I care more about if you know how hard that is, right? And so like a lot of us here are fintech folks. Like we know regulatory wise, every market is different. You need licensing and you need different licensing at different levels for different markets, right?
Mm.
That stuff takes years, not just years, but like multiple years, right? And so any type of roadmap that has, fintech payments or wallet services that isn't going through a partnership, I just don't believe. And so you have to show me that you have a realistic plan to go to those markets. Something on like, this question has elements of Web3 or developer tooling. Yeah, that can be interesting. I mean, if you can show me that you're building something that doesn't have the limitations both on the physical borders or on the regulations, certainly could be interesting. But then show me, that there's that opportunity space is still blue ocean in that market. Like a lot of people are like, we'll go to Nigeria, and then it's like there's 17 other startups doing what you're doing in Nigeria, and like Tiger is back for them. I'm like, what are you doing here that's different, right? So an understanding of like what it means on day one when like you set foot in Lagos, like what are you doing now, right? That type of practicality is what we're looking for.
Mm.
Again, some smaller teams for smaller markets might have to face this earlier, and then there are some teams with markets that are big enough where it might be like your vertical is deep enough. Like there's enough if you're not trying to build, let's say, a $10 billion business, but 500 to $1 billion business, that's enough, and maybe that allows you to really dominate. And I think especially in today's climate when funding is starting to slow, valuations are falling, it's my perspective personally that we're going to see much more specialized, geographically specific,
Mm-hmm.
dominant companies versus ones that are trying to go fast and hard across everything at once.
Yeah, yeah. I just wonder, like, just double clicking on that question. So let's say, like, yes, this company has a plan to expand. So we're in Nigeria today. We're a Nigerian company. We're launching in Nigeria. We have shown you like we plan to expand into Kenya and South Africa through XXX partnership and all. Like, when do the gears start to turn on those expansion? Are there any particular? Is it opportunistic? Is it like, how do I say, okay, now is the time to go into, because and that's why I asked, like a lot of things I've seen are mostly like reactionary, like more like, oh, someone is coming to my market, I'm actually going to go to their market as well. So like let's play ball in each other's market. Like
Right.
I don't see a lot of like, again, like just, oh, because of XYZ that we have in place now, it's time for us to actually go into said market. So like, I'm just curious, like for you, like when do you go from actually exploiting and serving a market part where you're dominant already, you're a leader, to actually say, okay, let's expand into other markets. So yeah, any thoughts on that?
Yeah, I think as soon as you understand for your own model where you're getting leverage in terms of scale, like what makes your team or your operations different that you can start to take advantage of scale, I think that's when you can really start thinking about other markets. Because I think the danger is when teams expand to other markets simply to increase some metrics, like whether it's GMV or sales, but they're doing it still at subscale. So you go from one subscale operation in one country to add another subscale operation that also, you got to feed it cash in order for it to run.
Mm.
So at that point, it doesn't really make sense unless that has been thought about for a long time, and that's got to be part of the strategy because there's some like synergies, for example, between those two operations. That might be the one case where it makes sense. But for me, it's when you can understand how your business within your home market, or it's probably the market that's easiest for you, frankly, right? You've understood how adding, more money to this machine produces even more value over time, and then you can kind of replicate that in another area after getting past all the hurdles that's required. Not before. Not before. Does that
Mm.
make sense?
Yeah. That's really good. I think if I mean, like, just I think one thing I've seen a few folks who are is like having a London team, and that London team is actually like a rounded team. So you have engineering, product support, like everything has to be there. And it's going to be hard to do that if you're in your core country, you're already subscaled, because that's even you having not enough resources to go do that in the first place.
Yeah.
So I guess like, yeah, I think just again having that, if you know that again, you are at a place where you have enough resources to even go again, even whether it's a pilot, whether it's again kind of like a thing, and some of this could be also experimental as well. Like in my oh, we just try this thing, and if it doesn't if it doesn't work, maybe we have like one or two, three, 1 to 5 pilot users there. We tell them this is a pilot. We don't know what we're doing here,
Yeah.
and
I mean,
yeah, and if it doesn't
I'll,
work, we shut it down.
I'll say that we're seeing a lot more teams choose M&A at in this
Yeah,
stage as like kind of
that's
second
fine.
or third tier
Yeah.
startups start to sell, and there's a lot there. Like, so example, if you do have a really well-oiled machine where you understand what you need to lever in order for you to keep growing, like taking a team that hasn't figured that out yet but has a lot of the local connections, partnerships done, and then adding that formula on top of them, you can really upgrade a local
Mm.
team somewhere else and really expand your operations, right? So that's one way that I've seen it work well.
Yeah. I mean, MFS Africa trips recently as well. Been doing a lot of acquisition to new markets, and yeah, that's cool. Before we come to Roman's question, I'll just take one more question from my side here. So consumption versus non-consumption, and this is
Mm.
a term I'm just trying to still wrap my head around, because again, like consumption says there is a market ready to actually use what I want, what I'm building, or what I'm actually offering. Not consumption is in a way is more like perhaps these people don't even know that they need what they need what I'm actually here to offer them. Of course, they have a problem, but again, perhaps that market is not defined yet. Um, like how would you again like for market creating? I mean, startups for who are serving both like say a formal and informal market, like how do you go think about again sizing market sizing for that? And the reason why I ask is that you could easily say okay, um, um I'm serving um tailors now, people who sew clothes.
Mhm.
I can count
Mhm.
how many tailoring shops are in Nigeria and say that's my serviceable market. But then there's so many like one woman and a machine. Like that's a very long tail of customers to or potential postmasters to serve as well. And it's very hard to again put a number on that. So how do you think about again those who are going after that kind of informal market opportunity where it's really hard to put a number on it? How do you think about market sizing for non-consumption?
Yeah, I mean, first of all, shout out to the prosperity paradox, right? For that framework. So I think the one thing that has always been a challenge about the idea of being able to serve non-consumers is that the one thing that we see across history around how that those things are or those markets are unlocked is some type of fundamental cost reduction. Um, where usually it's like either technical, where the technology itself is so cheap now that you can offer it at a price point that just makes more sense for folks, or you've been able to strip away all the excess for something like mobile money is a good example, right? Where you strip away the smartphone, you strip away bank branches. It's just you use a decades old technology, USSD, and you're just able to send information in the most fundamental universal way possible, right? Those are very challenging things to do, in my opinion, and they usually have to come off the back of some other type of market that you've already opened up, right? Again, to the mobile money example, mobile money is born on the back of MNOs, being able to first offer telephony, right, and then use those physical nodes, and then start like this very rudimentary style of banking. There is no USSD without the cell towers that MTN, Safari, whatever, whoever owned and built, right? And
Mm,
so that was not the impetus for the non-consumption becoming consumption on the payment side. The impetus is really people wanted to talk to each other and that
mhm,
there was money to be made there. And so I think that's the challenge that we always have, which is when a startup begins, they have to access a market that's available to them. And I think that's the phasing that, frankly, most of our markets, including Nigeria, that we're in today. So unless you're talking about something very, very basic like telephony, there just aren't a lot of players that are able to at a really large scale drive down pricing. Like we don't have a Reliance Geo. Like that's my example that I always want to give. Like a Reliance Geo, like from India in Africa, mostly because it's 54 different countries, to drive down data pricing, for example, to cents on the dollar. Like we just don't have that yet. And so what I think what we'll see is a lot of people opening up really and digitizing large swaths of value and then starting to approach non-consumers. But I don't think we're there just yet.
Mm-hmm. I'll just ask a follow-up question on that. So again, just using the example I gave again, and just in case we have founders or investors trying to again, like, because again, I don't know if you follow, like, I mean, there's a big trend of like people trying to formalize the informal market, like the B2B, Alesso, suppliers, trade depot, um, trying to serve like again that informal market, digitizing the B2B payment and things like that. So again, for the person who looks to serve that market, like in how did they even get the data to say this is how many these businesses exist? Like, and I mean, and as an investor, how do you validate that? How do you actually? And I know some of these things are more like guesstimates, and you're using like other like again and anecdotes and stuff. But I'm just curious, like, is there a framework to even say, okay, this is not a defined? Like, I mean, I can go on Google and say number of hotels today, and I see that it's a number, but like to tell like the number of like again one man tailor or one man shoemaker, things like that, like that's really hard. And I'm just curious, like, is there any thoughts as to like how
Yeah.
think about that?
There's almost a cold start problem to this in the sense that it takes a lot of people to try to solve the problem together and then like sharing data back to get actually really good amounts of information about it. And so like when the B2B marketplaces started in Africa, like no one really knew. So everyone was pointing to the same report that like some IFC SME lending like team did like 16 years ago or whatever, right? Like it was like 44 million SMEs in Nigeria, up to like 100 million if you count like a random multiple that you added to for informality. Like it was just like kind of off the top of their heads type of stuff, right? And so like everyone points to that. Like you know that it's probably not off by like, I don't know, 90%, but it's probably off by like 50%. So you have to assume that the opportunity is there. We're just not sure how big it is. And then I think we then start to narrow in more and more as these teams start to build and get an understanding of where they start to hit real roadblocks, where they start to hit real slowdowns in acquisition, right? So like we now know that, you know, they've acquired, you know, something that is, you know, less than 100,000 of these small businesses on an active level. That there's another leap to be made before we can really see like, you know, billion-dollar businesses being built out of these. But it takes some time for, I think, these business models to kind of go through. And sometimes we look at other markets like India, Indonesia, and see how far they've gone, what are the limitations there. But yeah, that's a roundabout way to say a lot of that data is probably from NGOs, research organizations, and maybe just one report. And then we kind of like piggyback off that over time as real data comes back from the market.
Fair. That's good to know. That's good to know. Okay. Awesome. Roman has a question here. What is the most underlooked market in Africa, from your opinion, that could be the best country to crack instead of going to Nigeria or South Africa like everyone else? I guess it depends. What? Yeah.
Are we including Kenya? Because I mean, Kenya would be like the next go-to market for a lot of people. But if you're going for like,
I think aside the big four, so big four is Nigeria, South
All
Africa, Kenya, and Egypt. Yeah, aside from those.
So you're gonna get me in trouble. If you're talking about like the indie markets, what I'll call like the markets that people are like who are cool are investing in. So I would say some of the ones that are really interesting to us tend to be in Francophone, right? So we look at Senegal very deeply now. Like we've certainly seen for some models that there is a blue ocean opportunity in places like Senegal, especially if you are again making that jump where the kind of Francophone region itself has a little less barriers to country expansion than other places. It's still very hard. Like people are overestimating the value of the single currency, et cetera, but there is a little less there. So Senegal is interesting to me. I think Egypt, like, so going against the grain, like Egypt has been talked about and like hyped to high heaven, and the valuations have gone to high heaven. But this correction is going to be really interesting for Egypt in the sense that a lot of these models that were carried over from Europe are going to slowly wither away. And we're going to see Egypt for what it really is, which continues to be a market that a lot of people want to treat as Middle Eastern, but still has a lot of African qualities to it. And so Egypt continues to be interesting for us. We're starting to look more into there. And then there's always the behemoths of Ethiopia of like trying to tackle that. Like we're not going to try to tackle that, but there's people who are trying to tackle that, and I very much respect them. And so between those three, I think you get to kind of pick your flavor of like what advantages you want to try to utilize.
Yeah, almost feels like a choose your fighter kind of choose your battles
Absolutely.
kind of. Yeah, I think it's yeah, definitely agree with those. I think francophone. And I'm curious your thought on the francophone thing, because I know you mentioned Senegal specifically,
Oh
but
yeah.
you hear people say things like, "Oh, we want to just like capture francophone Africa." Or that's our market and all. Like how did you set, like, was there any method to, because some we say, okay, what about Cote d'Ivoire, what about Cameroon, what about, I guess, so yeah, how do you say, like, how was it Senegal for you, just out of curiosity?
So I think that's just more selection bias on our end. I don't think we have like a data driven reason for Senegal right now. It's
Okay.
that we've seen pretty strong entrepreneurs from Senegal. We've seen the ability for people to get to a seed level of traction there. And
Okay.
then we've seen that other investors are also starting to understand it a bit better. And so
Yeah.
those kind of give it some
Yeah.
extra kick.
Awesome. Awesome. Um, okay. We're rounding off now, so I'll just have just two last questions here. And plus, for folks, if you have any questions, please you can use the raise hand. Um, you can just raise up your hand for a live question, or you can just use the chat. Um, so comparative data. So, like you mentioned it at the earlier on in your chat, you said if someone actually says this is about market, you could look at other like similar markets, again the output,
Mhm.
the AOV and things like that. For Africa particularly, and let's actually say for like again markets that are quite popular like Nigeria and all. Um, I know people actually would perhaps even compare them to, like, again, make comparisons to the US. Some people would like make a comparison to, like, again, other emerging market. What comparative data, or like what comparative markets would you advise, or would you, or do you use when it comes to actually looking like African markets like Nigeria,
Mhm.
Ghana, Kenya, South Africa, and all, like, and why? Yeah.
Yeah, and I would go a little deeper in that when you look at the segments within those markets that you're trying to emulate,
Mm,
or trying to emulate companies that are doing what you're doing for those segments, to understand that whether those segments also have the same barriers that you're facing when it comes to customer acquisition costs, when it comes to the potential average revenue per user, right? So a lot of people kind of downplay the comparison because they see like overall income numbers, for example, in Indonesia are much higher. But then when you look at rural specifically, like Indonesia faces a lot of similar problems, not necessarily on that 54 country problem, but Indonesia is a set of a lot of small islands. Like their distribution problems are massive. And what founders have had to do and how much it's cost to reach customers, I think does tell a lot for African founders as well. So the nuance there is, I think, is important so that when you do the comparison, don't just tell me that you're comparing overall India, but that you're comparing, the specific type of user also in India, or whether it's Pakistan, or sorry, Indonesia. So I think those all matter. And then ultimately, like I think what I look a lot at is like how close the distribution is. So if there's already like pre-built distribution that just makes it plug and play, like I take that less seriously compared to founders in other areas that have to face similar distribution challenges.
awesome, awesome. I guess we'll actually just wrap it up there. I want to just say thank you, Stephen, for joining us today and talking about market sizing. I hope this was of value to folks in the room. We would do a summary of this and actually share a recap on this on the blog as well. But yeah, please do check out DFS Labs, and also social sufficient cap is sufficient capital or social
Yeah,
capital.
so you can find us on Twitter at the DFS Lab, and then Sufficient Capital is sufficient.capital.
Sufficient of capital. So again, if you're looking at joining a syndicate to invest in the thesis that they've drawn up, please do check them out as well. And we'll keep looking at opportunities to co-invest
Yeah,
even into
absolutely.
the future. Thanks guys. We look forward to seeing you again next month for another edition. We also have we plan to have like